Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Happy Wednesday. Today's a big day. If you are somebody like myself who watches the stock market, watches this ongoing tech story and this software fallout, it's a big day because today we have, after the bell, let me just double check my math here. We have some pretty big stuff taking place in regards to earnings. Once this loads, there we go. So today we have a lot of stuff coming in regards to potential market moving earnings reports within the stock market. So what we're looking at after the bell today, usually I think it's 4:15 or 4:30 that we get the numbers from Nvidia. So we will be hearing from the biggest company in the world, the centerpiece to the AI story, Nvidia. The interesting thing here is that in recent moves, Nvidia has not actually been moving all that much. However, things could change today. We also have Snowflake, another big software related company. This one moves a lot here. We have the average one-day or earnings moves that we've been calculating here within Stockbox. And we also have Salesforce, which is a stock that I have been trading here myself recently. So I'm watching Salesforce after the bell today. I'm watching Nvidia, of course. And I am also, of course, going to be paying attention in the coming days to Intuit. So a lot of big earnings stuff coming down the pipeline, which has the potential to move the markets quite a bit. And you might say, well, Nvidia, what is it, like 9% of the S&P 500? So it is just mathematically important to the index, right? If you get Nvidia earnings and they come in a way that dazzle investors, that can cause the whole market to move higher. But the thing that makes this so important, why is Nvidia so important? It's not just that Nvidia is 9% of the index. It's that Nvidia is 9% of the index and a whole bunch of stuff will trade in sympathy to what they have to say and show. So what I mean by that is that if you're looking at Nvidia and Nvidia has something, let's just entertain the idea of a not so great report. They're going to beat their numbers. It's almost certain. They always do. They have, rock star revenue and earnings, and that's going. What's more a question is, are they going to beat by enough? And I saw a stat that was interesting. Historically, Nvidia usually beats their earnings by about 4%. So if you get over 4%, maybe the market likes that. If you get like 6 or 8% beat in terms of their overall net earnings, maybe the market actually says, all right, here we go. But the question is, if you get under, or let's say you get 2% beat, let's say you get a narrow beat today, that might be enough to get the market to actually kind of roll over. And what I mean by that is that there's a lot of sensitivity in this market. We know that very well, right? Just take a look at the VIX has been, not elevated to an extreme level by any means, but you do have some volatility in this market. And I do think that a large catalyst for that is, of course, the uncertainty around the software stocks that we've been talking about, every day on the show. So when we look at software stocks, they've been getting pummeled here. The thing that's holding up the index level, story, right? If you're looking at Nasdaq, right? If you're looking at Nasdaq, what's holding this thing up? Well, we've talked about it a lot. It's the semiconductors, and that's going to incorporate, the biggest of which being Nvidia. So when we take a look at Nvidia today with earnings after the bell, the question is, do we get enough of a beat to dazzle investors, right? So if we are talking about, a 4% beat is the quote unquote whisper number, can we get something higher than that? Let's say 7 or 8%. That would get investors to say, all right, maybe this is my speculation, that would potentially be enough to get the market to move higher. However, the challenge with all of this is that stocks have not been trading super well post earnings, even though earnings overall have been really good. There's just a very high expectation on this market. And so I'm a bit skeptical going into the Nvidia release. I'll have to say, I mean, I'm not betting that they're going to miss numbers or anything like that. I think they're probably going to hit numbers and continue to be, the monster revenue growth. It's the question is it enough to actually get the market feeling better? And right now, the trouble that I've been saying, and I will continue to say, is that, long term, I think software stocks are on sale. Short term, though, I don't know that this narrative is just going to fade away, right? I've talked about this a lot when we had the sell off last year around this time during the Trump tariff stuff. It was scary to the markets, but there was also that possibility that the Trump administration could take it away. And that's what they did, right? They kind of stepped back on their, hardline negotiations, and the market really liked that. They said, okay, that's good. But I don't know that with the software sell-off narrative that there is this sort of V-shaped bounce back event that could get this thing to rise dramatically. And it's not really showing up it doesn't seem like earnings being good is enough, because earnings in the software world are still very strong overall. The speculation of the market, the concern of the market is that looking forward, those earnings are going to slow in growth. So, yeah. Nick, I'm confused these days. I'm trading a purely technical strategy over the course of 2025. I made 32% gains, but I kind of deep dived into statistics and quant videos where they talk about edge and edge deterioration, string of lucks, and how statistics work and strategies always have to evolve. At what point do you think that you have decent edge? What amount of data do you think is enough? That's a good question. I think that if you're trying to build, a plan in regards to like, hey, this is the number of trades that you need to take in order to know that you have edge or not. Well, you should really obviously do a lot of back testing. I imagine that you probably have, but edge deterioration, especially if you have this is the most annoying part about it. If you have something that's working really, really well and it's purely technical, it's only a matter of time. It is only a matter of time before the market spots it too and erodes it away. Or the edge that you think you have is not as good as you think it is when market conditions change. So I'll give you a quick example. If your strategy over the last multiple years, because we're talking about software, let's keep talking about software. Let's say that over the course of the last, 3-4 years or whatever, your strategy has been, I buy in an RSI dip below, 20, right? I'm just making something up here on the spot. That would have been a monstrously successful strategy. You would have crazy win rates, remarkable returns, outperformance, remarkable, right? The problem is when market conditions change on you, boom, software goes like this, you can be met with a string of really nasty losses. The reality is, if you have some sort of edge that is built on technical analysis, I'm not going to say that it is inevitably going to get eroded away, but it's never going to be something where you just find some secret holy grail technical analysis based thing, because there are entire floors of like quantitative traders that find that stuff using supercomputers, right? They literally have computers carving out any edge they can find in charts way faster than you and I could ever do looking at charts manually. It's just not even a question. It's like trying to say like the smartest computer in the world that like an amateur chess player could beat it, right? It's just not going to happen. It's going to win against the human 100% of the time. That being said, I'm not saying that there can be no edge found in technical analysis. That's not what I'm saying. I'm just saying that if you think you have some sort of magically successful edge, you probably just haven't run into a market condition that really challenges your system. So when I look at something like, a technical strategy, I'm looking actually for something that has like 55 versus 45% expectancy. And then you can extrapolate that out how you want with risk reward, right? You could lower this and increase your the size of your winners, or you could raise your win rate and decrease the size of your winners, etc. But generally speaking, this is why I kind of always default to a decent strategy with good risk management beats any sort of holy grail looking strategy every single time, because holy grail systems, you find out that the grail is not actually holy, if that makes sense. Hopefully that was helpful. But again, that is the sort of thinking that it's why trading is hard, right? Because you're never going to just stumble upon something that nobody else has found. It's going to be a magic money printer. Most of the time, that dream is a myth, and it's a dangerous thing. So instead, approach the slow and steady. Look for decent, slow and steady returns and edge on a strategy rather than magically good strategies. Does that make sense? I hope it does. Can we check out the Dow Jones? Yeah, let's take a look at the Dow. So Dow has been really choppy here. And from a momentum perspective, I'm not seeing it in the indices right now. We are trying to regain. I'm watching these things close. If I take a look at S&P 500, we've staged a nice little recovery here. But we've said that a couple times, right? We've had this, shoot lower, buyers step in, shoot lower, buyers step in. I'm a momentum trader in terms of the primary stuff that I do. So I'm looking for momentum that can actually sustain itself. And I do keep my technicals very simple. So going back to that technical edge concept, all I'm looking for, I like the idea of something as simple as some moving average breakouts, right? Let's get all of our moving averages lined up. Let's see that break through those highs. Let's get clear above 7,000. Could Nvidia take us there today? I wouldn't say it's likely that we're going to open up tomorrow higher than 7,000, but it's certainly possible. And from a momentum perspective, I'd love to see S&P start to actually break through these highs. If we got that in combination with, a couple other things kind of flipping in our direction from a fundamentals perspective, that would be cool. We did flip a little bit more positively yesterday on the S&P 500. Now we are still in minus territory, but we went from bearish on S&P to neutral. And part of the reason is actually the fundamental score increased yesterday. How did that happen? Well, consumer confidence came in much better than expected, 91.2 from the CB consumer confidence compared to forecasts of 87.4. This number was in the gutter. So I like seeing momentum is something that we study really hard on this channel. And it's not just technical momentum. We also look at fundamental momentum. And so right now we are starting to see some gears turning on the S&P 500. So we have a technical bias that is getting a very bearish reading. Seasonally, it is a really rough time historically. You're just fighting the stats in terms of being bullish on the S&P right now on regards to seasonality. I'm not saying that we cannot go higher. I'm saying that from a very simplistic perspective of historically this time of year is pessimistic or bearish for S&P, we are fighting the stats on that side. So I wouldn't mind the idea of just staying patient here, looking for breakouts. But we do have some economic growth data that has flipped more positively. The GDP growth numbers were not great, but PMIs were solid, and consumer confidence coming in better than expected is good. We also had better than expected CPI, and the 2-year yield is remaining tame at this time, suggesting more rate cuts could be on the way. If we take a look at jobs market bias, things have improved. Non-farm payroll, unemployment rate, and weekly jobless claims all beat expectations. And so from an overview, we do have a slight positive fundamental or macro setup. However, COT data showed institutional selling, and technicals are pretty not great right now. So what am I looking for on S&P? Well, S&P, Dow Jones, Nasdaq, I'm looking for technical momentum to break us out of this funk that we have been in. Perhaps Nvidia is the candidate for that. Perhaps not. We'll see. overall, we'll keep an eye on this 7,000 level. I think that's where a lot of investors and traders, myself included, are watching for that kind of advance in momentum to the upside. From a bearish perspective, and I do remain kind of on the neutral stance, really truly on S&P. From technical momentum to the downside, we'd be wanting to see a break of this 6,800 level. And I think you really look rough if you start breaking this multi-month structural low, around this, what is this, 6,750. And if we take a look at NAS, very similar story. You have these lows that I would watch really close. If you were to break these, this would be more concerning. And what I would imagine would happen for this to take place would be that semiconductors kind of lose their edge that they've recently had over software. If semiconductors started to move lower, one of the biggest risks that I see to the semiconductor world would be if for some reason the CapEx spending on the Magnificent Seven, the big companies, right? Microsoft, Meta, Google, if they started to slow their spending on the semiconductor stuff, that could potentially roll over, I think, the overall market in the short run. But I don't necessarily think that that's likely to happen, but we'll keep an eye on it just to see how that all plays out. So I kind of remain neutral on NAS. Dow Jones, if I'm looking at Dow, let's just see where we're at with Dow Jones here. Dow Jones is still getting a -5 reading. So not great on this one. Technical score still looks pretty rough. Fundamentals still getting the same score, of course, as S&P 500. And we also did see some net selling from institutions. And we have kind of a 50-50 shot here on futures contracts traded through the non-commercial COT report tracking. So we'll keep an eye on it, but let's just take a look here in terms of Dow Jones from a technical perspective. Remember, by the way, that you're going to have Nvidia impacting the Dow Jones because it was added. So, the Nvidia will be moving all of our major indices after the bell here today. So we will keep an eye on that. From a bearish perspective, if you're looking at Dow Jones, if you're looking for lower price, watch this breakout here. Around 48,500 would be your spot. And if you are a bull, you're looking for a break through the all-time highs back above that psychological 50,000 level on the Dow Jones. But for me right now, just kind of choppy neutral on this one. I'll watch for ideas, but I'm not going to, force any trades in what I believe is just kind of no man's land right now. Taking a look at the Russell, I do actually like the Russell the best from a technical chart perspective. You kind of have this attempt to break out here happening today. I just look at it with a little bit of skepticism just because we have seen such a choppy market here for the time being. So I'm watching the Russell. I'm watching, this one's likely to be the least impacted by Nvidia of the major US indices, but we'll still keep an eye on it, see if there's anything there. If I take a look at Russell's score, it is the highest of the indices within EdgeFinder. You can see a +2 reading overall. Fundamental score looking the same as, of course, the other two. Institutional activity also was a little bit bearish here recently, but technicals getting a bit more of a mixed reading there. So we'll keep an eye on that and keep going. Wow, Nick, you're really going into much detail. Much appreciated. This is just I'm just doing my own process. Like if I was just, that's how these streams started. I just always filmed or streamed what I would be looking at myself in my own trading. So we'll keep it running here. Let's take a look at our top setups page and just see what else we've got. Nick, how's the Nikkei chart? It looks phenomenal. In terms of EdgeFinder reading, I think Nikkei is getting a neutral reading. Yeah, it is. So it's getting a neutral reading right now. Let's just filter our thing here. We're going to remove neutrals, and I'm not sure what the null is. Looks like we have, this is, I'll tell you what this is, guys. This right here, you're like, what the heck is this symbol? I know what that is because we're working on it behind the scenes. We are adding, how we have US dollar added? We have the rest of the major currencies, their index coming to EdgeFinder. I am so pumped for it because obviously, when you trade Forex, you trade currency pairs. But sometimes people like to take a close look at just the dollar in isolation, or just the British pound, or just the euro, or just the JPY. Basha, you were on it, man. You knew that was coming. That's exactly what it is. This little new undisclosed. It's kind of like you remember like when you're watching like the Pokemon TV show where it's like, who's that Pokemon? This is who's that Pokemon. And I'm telling you who it is right now. The commercial break just ended, and it is probably the British pound. That's going to be my guess, but one of them, and then the rest of them will shortly follow. The developer and I are working on that here off camera. So stay tuned. Yes, you do, Bashy. Tiger's celebrating. I know all my currency traders will love that stuff. So going to be fun. All right. So taking a look here at our top setups for the day, we got copper getting a bullish reading. This is a new setup. U.S. oil, love this. So where the indices are lacking that momentum, I still like U.S. oil quite a bit for the momentum characteristics that are showing up both in price and in macro. So if I take a look here at oil, so I like this chart quite a bit. I think you are currently coiling up, potentially, right? We don't know. We never know where price is going to go with certainty next. But I think you could be coiling up here for another shoot higher on oil. I like this chart so much more. And when I talk about, like, look at this chart where we have, kind of this downward structure that broke clean out. And now you have these lows coming in and being bought. You have new highs being reached. Look at these expansions in price, right? This is not rocket science. I am not a genius, right? Keep it really simple. We look at a chart, we say, okay, this one's rising. This one over here, what is this one doing? Nothing. It's just range bound. I am humble enough to say, I'm just going to go for the easier chart, right? I'm going to go for the one that seems to be moving with some conviction, and I'm going to leave the other one be. I'm a trader. That's the benefit of, like, let's lean into being a trader aspect rather than a passive investor. If you're a passive investor, you just sit in this and you wait, right? You don't have many other options. As a trader, you have a lot of options. And so I look at this and I say, okay, I've got a chart here that's moving. I look at asset scorecard. I go to oil. And I got to say, I think 2026 is the year of absolute just systematic trading to a new level for me personally. EdgeFinder has gotten remarkably better since we launched the product. But I've never felt more locked in with the EdgeFinder in regards to my own trading and process. I hopefully, if you're someone who has a copy of EdgeFinder or you are considering getting a copy of EdgeFinder, I hope you're kind of watching what I'm doing. And you may do things differently than me. Like, I'm not saying what I do is the right way per se. I'm just saying I'm hopefully showing by example here what that systematic trading actually means and looks like. Because again, I'm not the world's greatest trader. I have terrible ideas and bad ideas at times too. So I'm not, like, look at me and watch because I'm the best. Like, that's not what I'm saying. I'm just saying, at the very least, recognize how locked into a systematic approach I currently am. I mean, it's not changed over the last few years, but I'm more and more comfortable with the strategy, with the system. I now, when I pull up EdgeFinder, I only need asset scorecard and Forex scorecard. Like, I don't even need the rest of this. Obviously, I'm a junkie and I love looking at all of it. But from a execution perspective, we are hitting new strides in regards to execution. EdgeFinder chart execution is pretty, I'm not going to say flawless because that sounds like, oh, we're winning every single trade. Not at all. From a strategic flow perspective, never been better. It's just very, very quick with this new asset scorecard. This is my favorite tab on the EdgeFinder by far. Top setups was always the top favorite one for me. First place has now been taken by asset scorecard. It is so easy, helped tremendously by you guys. We had a lot of feedback. People gave us ideas on voting on how this could be better laid out. And that is why it looks, I think, so clean. So anyways, from a flow and execution perspective, there is no question of what I'm supposed to do with oil, right? We had a huge impulsive move. We found some support, or I'm sorry, we found resistance here previously. We broke that resistance. We are now consolidating just above this range high. So my stop needs to go just below that area, just in case this pattern fails. Out of there, next trade, move on, not thinking about it, right? We're just staying systematic here with the approach. We have nice momentum. I'm there for it as long as it remains. I'm gone once it's gone. Nick, I didn't get to tell you, I passed some evals and moved into another round of funding thanks to EdgeFinder, free EdgeFinder last week. Cheers. That is awesome, man. Congratulations on your success. Keep going. I love getting those messages. And please, if you have them, look, I know most people lose money trading, and I can tell you that for a fact, not just because the brokers publicize that. They have to in a lot of jurisdictions, but also because my inbox is full of people's really tough stories, and rarely I get really great stories from traders. So if you ever, have reached some milestone in your trading, please share with the class. You are not bragging. You are helping others to see what is possible if you lock in and you really lean into your educational process and you become systematic. You become, diligent in your trading approach. If you get funded, commented on my videos, if you or on the live chat or in the Discord, if you're in the Discord, if you are at equity highs for yourself this year, if you are break even this year where you've lost every other year, share that and celebrate that, because every step of the way is an improvement. If you are saying, look, I had someone who was beating themselves up because after 2.5 years or 3 years, I can't remember their comment, they said that they were really frustrated to only be a break-even trader. And I was like, dude, if you are 2 or 3 years into your trading and you're at break-even, you're doing great. You're not giving yourself any credit. This stuff is hard, man. Like, no one expects to go get a degree and become a doctor in 3 months, right? But yet trading for people feels like, oh, I should be able to trade profitably for 3 months. Who's your competition? Ask yourself. If you want to become a doctor, who's your competition? A lot of people want to be a doctor. A lot of people are willing to go through a lot to become a doctor, to get that education and to get that role, because it's prestigious, because it's sought after, it's in high demand. Everybody wants to be known as Dr. Nick Syack. Gosh, that sounds good. Too bad it'll never be a thing. I'm not book smart enough for that stuff. Anyways, here's the thing, right? Everybody wants those things. Everybody wants to be a profitable trader. Are you kidding me? Everybody wants to be a profitable trader. Well, I guess not everybody, but anyone who starts getting into trading wants obviously to be the profitable trader. You got to earn it, man. And you got to also recognize that if you are getting to a point where you are break even, dude, do you know how many other people never made it even close to that? Most people just lose, consistently. So give yourself some credit if you are at that break-even stage. If you are just losing less this year, if you're like, hey, I used to be down 40% in my account when I messed up. Now I'm down 2% when I have a bad month. Those are improvement points. You're in the right direction. Keep going. You might actually get to the point where you are profitable. Anyways, there's a little bit of motivation for you, but again, practical motivation, not that garbage. Here's my, Lamborghini. Here's my Ferrari. I'm living on the beach and I'm making them. That's nonsense. Get that out of your head. That stuff. Challenge of the day before I toss over the stream to Forex James. Go through your social media posts. I'm not even kidding. You want to be a better trader? Go through your social media. Get rid of all those people. They do not help you. They hurt you. Get rid of all of your gurus showing you, some sort of lavish lifestyle, and start adding people who ran hedge funds. Start listening to interviews with professional traders who actually have track records. Start watching people backtest. Start learning about macro fundamentals. Get rid of the gurus, man. I'm telling you, you want to improve in 2026? It's like that is the quickest way to kind of brain drain yourself is to watch all those gurus all the time. That stuff is not real. It's not real. I'm telling you, through the airwaves this morning, that stuff is not real. I am a profitable trader. I have met a lot of these people. I can tell you from the other side, with track records and results and everything, all the people that I know that are wildly more wealthy than me and wildly more successful in markets, they're not doing that stuff, right? They keep quiet. They stay home with their families. They take care of their families. They don't show on the internet some fancy car. Those people don't make any money trading. Some do, very, very few of them. And if you're an amateur in this game, you can't tell the difference. So get rid of all of them. That's my opinion. Anyways, with that said, up next, we've got Forex James going to take over the stream here. And I believe you guys, he's got something really cool to share with you all today. It's a free PDF that he put together, as well as a course guide on how he uses EdgeFinder in extreme depth. I went through it myself and the thing looks amazing. So stay tuned on that. We'll have that for you in just a second after this quick break. Stay tuned. Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. I've just realized I'm not sure I've got the mic correct. Let me know if you can hear me okay. Hopefully it should be plugged in. I'm not sure I've got the right one. But yeah, as Nick said, before we get into anything, I put together, it's a video course, it's completely free, and a written PDF. So through both, we go through a step-by-step guide on basically how to use the EdgeFinder for trade discovery. Then we go through a technical strategy, which is exactly what I use and very similar to what Nick uses, called the momentum strategy or the momentum model, whatever you want to call it. And that's basically the trade execution. We go over a little bit of risk management as well in terms of correlations and portfolio exposure and those types of things. So if you are a newer trader or you're someone that's wanting to just expand their swing trading knowledge or their EdgeFinder knowledge or their economic knowledge, go ahead and check it out. Again, it's completely free. I'm sure it'll be dropped in the chat shortly for you. But yeah, there you go. That's my pitch of the day done for you. So positions, what we have got. My portfolio is a little bit up and down at the moment. Overall, doing fine. But there's a few positions I'm not overly satisfied with at the moment, but we'll go over those now. So silver is still running. I've been sat in this one for a while now. So I executed the position down here all the way on this initial drop. So basically since the start of February, about 20 days, give or take, I've been in silver for now. We took gold yesterday. So I'm not sure, I think we went over gold quite a lot last week. Yes, Wednesday, so it wasn't earlier this week, last week. So we were looking at this level of resistance previously. So my idea was basically for this break and then look for the retest and then a continuation or a 50% retracement, which I didn't manage to find or execute on. So we got the retracement back here from obviously this low to this high. We draw the fib. Price pulled back into the 50% value level. Also a retest of this previous level of structure. Also pulling into this level, the 100 moving average right here as well. So we entered a long position, very small risk, obviously, where I'm already in silver as well. So I don't want to get over leveraged in the metals markets. But yeah, that's the current situation on gold and silver. In terms of targets for gold, I don't really have one, to be honest with you. I've seen various targets being thrown around. You know, there's some people saying we can just reach the previous high and then we're going to take another dip. We might see profit taking, completely valid. We've seen JP Morgan give out, it was either JP Morgan or Goldman Sachs, it was one of the two, I can't remember, talking about 6,500 by the end of the year. So to be honest, I've got no interest in taking profits. It's more going to be a case of just trailing stops. If we get stopped out, fine. If we don't, happy days, we can let it run. But yeah, I'm not going to cap this trade, because if we go back and look at gold historically, we could say very similar things in the past. You know, we could have been buyers during this point and said, oh, we've just peaked, or we've just made a lower high, closed the position, and then we would have missed out on all of this. So I'm just not willing to cap gold, but I will be managing the risk pretty tightly. Same thing with silver. So oil, also in oil, I think Nick's in a very similar position, if not the same one actually. So we've got oil giving a bullish reading here on the EdgeFinder. It's actually the most bullish, with a very bullish score of 9, which is obviously great. We've got the tensions with the US and Iran as well, which was obviously supportive. So I decided to go in for an additional position and scale in. Obviously lower risk, it's half of the position size as my initial position, because what I don't want to do is scale in, this one gets stopped out, and then I've given back all of the profit from the original position. That makes no sense. So obviously smaller size on the scale in, but I'm looking for a retest of this level and then a rejection higher. So same thing with gold. So we've broken, retest, and then continuation. Whether we get that or not, I don't know. It's looking a little bit rocky around here. So we'll see how it goes. Let me see. Chat. Max, hello. Bashi, hello. Rob, hello. Good to see you guys. Loving the silver trade. Yes, silver's doing fantastic. It's at the point now with silver where I can really just let it run, because they're already small position. I mean, you can see the 0.01. They're very small. So it's a case really of just letting this market go. It doesn't really matter what happens in the short term, in my opinion, at the moment anyway. Obviously, if we crash down to 40, that would be a different story, but that's not very realistic at this time, I don't think. So this is where we start getting into some of the not so pretty trades. I took a short on the S&P, which initially was actually working out quite well on this move here. Same as always, look at the fib, look at the high for the fib and then the low, pull back, rejection of this 50% values, or the fib value zone here, and then initially started running down quite well. However, we do have earnings tonight, as Nick said at the start of the stream. So yeah, I don't know, maybe that's applying some pressure to the upside. It is very difficult to be a short seller in the US market specifically, so I'm not taking much risk. There's only $100 on the line here, so it's not a big deal. However, the reason I went short was kind of threefold. We did actually, when I took the position, we had the S&P reading bearish, which isn't the case at the moment. So that's one of those little red flags to hold up there. However, if we look at COT, we do see that on the previous release, so February the 20th, we did see quite a large net change of negative 6.67%. So net positioning here is negative 173,000, give or take. So overall, slightly bearish sentiment on the COT report. Obviously, we also want to check put to call ratio. That doesn't tell us too much here. And then we can also account for seasonality. Now, I don't use seasonality too much, but it's something to pay attention to now and again, especially when there is things like the S&P. I normally disregard it when it comes to G7 currencies, G10 currencies, but with indices, it can repeat a little bit more reliably, in my opinion. So we do have this period here that I am looking for sort of a repeat of. So with all of that in mind, so we've got pretty large selling last week on the COT report. We've got bearish seasonality and the fact that the S&P hasn't moved all year. In fact, since I think it was November last year, the S&P hasn't done anything. We've seen no directional movement. We are just stuck in a range. So we could break out higher. Again, it does seem like that's going to be the case again with earnings as well. And we do have a Fed that's looking like they're going to cut at some point this year. So I'm not discrediting the fact that the S&P can just continue to rally. Fine. But I also think there is a possibility we can start breaking these lows. If we go down there, that we could possibly break November's lows from last year. And then possibly actually come down towards 6,000. So the reason I'm looking at 6,000 is basically just the typical market behavior of the S&P. So when we have these crashes, it's common for the market to come and sort of retest around that level. Not perfectly, the markets aren't perfect, but this was obviously the COVID crash. So we had the pre-crash peak. The market came back down to sort of retest around this area. Right here, we had another downturn. The market came back and retested this level. Then we have the tariff crash here. So I'm looking to see, can the S&P come back to around 6,000 and do exactly the same thing it's done here, here, and actually not here. So the previous 2 or 3 times, give or take. So we'll see how it goes. But again, not really too bothered either way. It's just one of those things. If it works, fantastic. If it doesn't, it's fine. Now, the euro pound, I've been sat in this one for a while now. It's been, sort of since 9th of Feb, I think it was. So yeah, maybe just over a week. I did have a scale in position around this point here that was stopped out break even around there. So not really a big deal, but it's more a case now of I'm looking to get back into another scale in position. So we've reestablished this bullish trend with the moving averages. It seems like we are seeing quite nice rejections around this level. We're seeing some buyers stepping in. I'm still seeing the Bank of England as more dovish than the ECB. So a little bit of a central bank idea there. So I'm looking for something like this. Well, actually, hold on, let me just move that up. So if we can reclaim above this previous level of resistance, then I'll look to add in. If not, fine, I'll be trailed out for a $10 crazy profit there. EuroCAD, I know I'm sort of waffling through these, but I'm just trying to explain them sort of so they make sense, but not in too much detail so that you get bored. So pound CAD, this one initially did really well. So I entered right here and I was in this move and then we pulled back. So I scaled in looking for the very same thing. So we broke, retested, and I was expecting a continuation to the downside. Obviously, as I said, relatively dovish Bank of England, and oil was doing quite well at the time as well. So I was expecting that to also be a benefit for the Canadian dollar, which so far it's not been too great. But we'll see how it develops. I'm not going to close it just yet because I do still see potential. We've still got this downtrend that's intact. This is very likely just a sort of double top before we can maybe come lower. We'll see. Euro Aussie, this was actually just a DCA trade. Nothing really that interesting here. Just added in on a little pullback up here. Stops are at break even. So if we do end up coming back on the daily time frame for a bit larger of a mean reversion slightly up here, that's fine. I'll be out for break even and I look to re-enter at a better price. Not Euro Aussie, Euro dollar. Also very small DCA positions. This is more of a long-term idea. Now, don't get confused with this one when I show you, but I'm not actually looking to take euro dollar down to parity or towards parity. This is more just a visual marker for now. Euro dollar's had a fantastic period in 2025 or from mid 2025 to the end. And then if we also look at the monthly time frame, we are in this bearish trend. We create these sort of lower highs on this monthly as well. So I'm kind of just looking, can we continue lower from this point? If not, fine, whatever. If we can, fantastic. I can look to scale in and start building up a larger position over time. We do also have euro dollar reading bearish. So if we can see a more solid technical setup, then I'll look to actually put in some more size. But yeah, right now it's more just testing the waters with a couple of light jabs. Pound dollar, very similar idea to euro dollar, really. Do we still have it? We do. So pound dollar is also getting a bearish reading of -6. So I executed, the entry is still completely valid actually here. So previous level of support was broken, retested into the fib value zone, and then obviously expecting a continuation. We're not quite getting that just yet, but we are still rejecting this same level. And the EMAs are still sort of bearish here. So I'm happy to hold the trade, let it run. If it works, again, great. If not, fine. Pound NOK is another one that is just absolutely not working. So, you know, there's not much else to say on this one. It's just, yeah, looking like it's going to be a very quick stop out, unfortunately. But it is what it is. I don't really close trades prematurely unless there is a specific reason, you know, if something is absolutely changed, which there hasn't really been any change. It's just the market isn't moving as expected on this one. So I'll let it run, see what happens. Anyway, let me read the chat. My apologies. I ran through those and didn't see what you guys were saying. Yeah, so there we go. Nick's dropped the link in. So if you do want that course, again, it's completely free, no cost. Yeah, go and grab that one. Do you still have something on PANCAD? Yeah, I'm still in pound card, but I'm not overly interested in it at this point. Previously, when I did take the trade, we had a bearish reading on the EdgeFinder. Oil was displaying very clear, very decisive strength. So yeah, that was the situation at the time. It's not quite the same. Oil seems to have flattened out a little bit. And obviously pound CAD isn't on the EdgeFinder as a bearish reading at this time either. So if you're not in pound Canadian, maybe just avoid it for the time being. I think the real push would be some sort of escalation between the US and Iran, or worse data out of the UK. Because to be honest, the Canadian economy is not looking too hot either. Joshua, good to see you, my friend. Hope you're well. Is a serious one? Coco's going to explode. I'll take your word for it, ball out. Pound dollar, yeah. Fun fact, I closed NADS yesterday because of Trump's speech overnight and risk of news action on prop firm. Now it's ripping. Yeah, that's the thing. With these US markets, I'm finding it very difficult to be bullish at the moment. I think there's obviously an argument. These markets are, as I said previously, it's very difficult to be a short seller, which is why I'm not in with really any size at all. But I'm just cautious. I don't know really how to explain it fully, but it just gives me that feel. And this is absolutely not a trade idea. This isn't me justifying the trading by any means, but I just find it very, very strange that we've had the COT selling, we've got bearish seasonality, we've got the Fed that looks like they're going to cut, but we've just seen no movement. There is just no decisive movement at all in these markets all year. You know, we're almost in the third month of the year. There's just nothing. I find it very odd. Now, that's not to say that it has to collapse or it has to rally, it has to do anything. But again, I just find it strange. So that's why I'm willing to take a little short position. Again, if it doesn't work, fine. If it does end up flipping, I'll be quite happy to look for a long position on a retest, and then again looking for a continuation to the upside. But for now, I'm happy to just stay with the bet that we might see some downside. Playing counter trend, best to go in light. Yeah, I don't do counter trend, generally speaking. Obviously, the S&P position is, but my day-to-day trading or my normal trading is never against the trend. The trend is always your friend. London's been dead the past few weeks. It has, yeah. I've not really seen anything interesting during London sessions either. It's just a snooze fest, really. So someone asked for pound dollar. Yeah, so as far as I'm concerned, pound dollar is still bearish. Give me a second here. I just want to read off. Yeah, so Fed is getting a neutral to hawkish stance. Fed hold rates amid cooling inflation but elevated levels. No rush for cuts. Hawkish. Wait, hold on. Sorry, I lost my line there. Rate cut timing discussions next week. Okay, so not really anything overly interesting with the Fed. The Bank of England cautiously dovish as inflation nears 2% target. Cuts on table for 2026 with March 16 MPC meeting key amid sticky service inflation. So in terms of central banks, there's not a huge thing there. It's not like the Fed is aggressively hiking and the Bank of England's aggressively cutting. There isn't a huge thing there, but I think there is enough to warrant pound dollar creeping lower. And I am still cautiously bullish on the dollar as it is. So the EdgeFinder is giving the dollar a bullish reading, as we can see here with a score of 7. It seems like we are catching a bid on the dollar as well on this weekly time frame. So it's just one of those things. I'm happy to take the risk. If not, fine. But to me, everything's sort of lining up. We've got a little bit of a central bank idea there. We've got some dollar bullish readings. We've got the technicals that have lined up as well. So what more can I do? You know, playing the system. If this system doesn't play out on this trade, whatever, move on to the next. Some annoying element is Swiss strength while risk look to lean risk on. Yeah, I'm not seeing really any risk off movement at the moment. We did was start of the week, I think we had risk off sentiment, but yeah, right now it's fine in terms of the risk sentiment. I wouldn't say it's massively risk on, massively risk off. It's kind of just average, if you will. I do everything on lower time frames, so it needs to be a bit more diverse in risk management. Yeah, I mean, lower time frames are very, very difficult. I've started trading. In fact, Bashi, I think you saw on Twitter, I've started doing a lot more scalping. However, only on New York sessions and on Nasdaq and silver. So the problem with currencies on lower time frames is you get caught in so much noise, or you can get caught in so much noise. It's just much, much more difficult to trade currencies on 1 minute, 5 minute, even 15-minute time frames can be much more challenging. Can you look at New Zealand dollar? Of course I can. New Zealand dollar right here. Yeah, so similar thing. It's just not doing anything. So we were looking at New Zealand dollar not too long ago because it was, it's not, oh, it is, it's bearish now. I think New Zealand dollar was bullish when we were looking at this original idea. So what I was saying really was, if I was going to be a buyer, I need to see the break, enter on this retest and look for a continuation. But then if we're bearish, exactly the same thing. Now, the only downside here is the daily time frame is bullish. So we've had these moving average cross, which just tells us that obviously we had this bearish trend here. This bearish trend is no longer the case. We're now objectively bullish. So with the idea in mind that we don't really want to trade against the trend, especially sort of the daily, weekly H4 trends, ideally, there's not really anything to do here. So base case is, let's say the EdgeFinder continues its bearish reading on New Zealand dollar. What I would need to see, and this is absolute minimum for me to look to take a trade here, would be the break and the retest, but I would also need these moving averages on the H4 to then cross bearish, because at the moment they are still technically bullish. So if we can change at least the H4 bearish, we can break out of this range and we can have the EdgeFinder bearish as well. Fine, I might take the risk trading against the daily trend, is what I mean by taking the risk. But yeah, by no means I'm seeing anything that's really interesting here, to be honest with you. Doing good. Low time frame isn't for the weak. I've got to say, actually, it's interesting because when you swing trade, you get into such a, I think Nick's spoken it quite well actually about his process being much more systemized this year. And you get, when you're a trader, or at least when you're sort of in that learning phase, you'll reach a point where something clicks. Not clicks as in, oh, that's why I'm not profitable, or that's going to be, not in that sense. I mean, something will click in terms of, that's what you want to do. That's the style for you, and that's what interests you. That's what you see the most success with. That's what you feel most comfortable with, etc., etc. And for me, that was swing trade, and that's why I do it as my main trading style. With scalping, I noticed so much more emotional input compared to what I'm used to. So I was sat there, and I had 100K in funding with Top Step. My first attempt, I was so proud of myself. Lost one of the accounts because I fat fingered the size, which was a complete mistake. It was my fault, obviously, but it was a mistake. However, I lost the second one because it was just so easy to just keep going. It felt like a casino, just click, 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 click. And obviously swing trading, you can't do that because it takes hours, days, weeks for trades to play out. Whereas when you're trading on the 1 minute, the 5 minute, within an hour, you could make thousands or lose thousands. It's insane. So that was a trap I found myself in on the scalping side, which it really caught me off guard again, because it's just not something I was used to experiencing. However, obviously, I acknowledged it, moved to some slightly higher accounts, and the day goes on. Did earnings come out? I don't think so. I don't have the stock box. I kind of want to buy it, actually. Maybe I will do. But the stock box has the times of the earnings. I don't have them on me. I'm not sure I've traded. I don't even know where to check for earnings, to be honest. I'm not a stock guy. I don't know. Does it have it here? Would it be on... I don't know. Anyway, Google's free. Go and have a look. Shame had it glitched. What did? Oh, YouTube glitched. It might be my internet, to be fair. I'm not sure. It's been a bit unstable recently. Anyway, I've got about 5 minutes left, ladies and gentlemen. So let's do a quick final scan, and then I'll who's on after me? Let me just double check so I can throw it over in a professional way. So I'm not just saying someone else. Marco is on after me. Perfect. So what we've got, the Dow is getting a bearish reading. However, with Nasdaq and S&P moving to the upside, I'm not sure I'd want to be short Dow right now. I mean, they're not like one-to-one correlated by any means, but I wouldn't want to short Dow if the S&P and the Nasdaq are performing quite well. Copper is interesting though. Let's take a look at copper. I'm not even sure I can trade copper on IC markets. I can't. That's slightly frustrating. So even if I wanted to take this trade, I can't take it here. But yeah, I mean, let's have a look. What could we see here? Yeah, so monthly, weekly, daily bullish. So H4 actually looks quite nice. So if we were looking to trade copper here, I don't think there's anything to do. I think it would be a case of waiting for pretty much what we saw on gold, which would be a decisive move in the moving averages. In what I mean by that is sort of the moving averages fan. So like what we see here, where they're nicely separated, when we have them all closed up like this, it kind of just indicates the trend isn't fully defined. We could end up just sort of range bound from here. So I need to see them sort of establish themselves. So beyond that, we'd need to see a break. We need to see the retest here and then a continuation. That's kind of it in terms of technicals. I keep my approach very, very basic and straightforward. Remember, the more complicated you make it, the more difficult it is to repeat, the more difficult it is to consistently perform. Aussie New Zealand is also one, actually. I forgot about Aussie New Zealand. So I'll do Aussie New Zealand and then we'll throw it over to Marco. So with this one, I've been waiting for a trade for quite some time. I was in long at one point. We took profits and I'm just waiting for another entry. So obviously very nice bullish trend. It's more now a case of just waiting for some sort of pullback. So likely I'd have to see something like this. So this would be not ideal or not super perfect, but sort of come back down, retest this previous high that we've got over here, pull into the fib zone, have a little bit of a mean reversion towards these moving averages down here. Then if we can see a rejection, that would be a really nice execution or a really nice area to execute a long position. Now, as I've got a minute or two left, we'll just have another look at the higher time frames. We've spoken about this multiple times, but it is something very important that you do need to keep in mind if you're looking at FX markets, because on higher time frames or on the larger landscape, currencies don't move that much. Like, 500 pips to a trader sounds like a lot, but in reality, or on higher timeframes at least, it's really not that much. Now, we see that reflected by, obviously, this sort of sideways movement. Now, not every FX pair does do that, but generally speaking, we can expect FX pairs to mean revert like crazy, especially, again, on higher timeframes. So Aussie, New Zealand, because we've got correlated economies here, we do just see this sort of sideways range. And this has been going on since 2014. And we've now just had an absolute rocket ship to the upside. I'm very cautious that even if we did get an entry within this area, you're still buying very high relative to previous price levels. So it wouldn't be a surprise to me if we actually come back down, maybe have a retest here, and then potentially a continuation to the upside. Worst comes to the worst, let's say the RBA flips dovish, maybe the RBNZ actually flips hawkish. We could just end up right back in the middle of this range and just back in a range bound market for the next 10, 15, 20 years. So yeah, we'll see about that. But again, I know that's maybe a little bit of over explanation, but my point is I don't really feel overly happy buying up here. I will do it, obviously, if the entry comes, but that would be reflected in the position size in terms of using lower risk, I think, because lower timeframes, it looks perfect. Higher time frame, it looks very stretched. Shells, hello, good to see you. Yeah, lower time frame is very different for sure, and you need a lot. Need to make adjustments on a lot of things, including psychology, how you behave. Yeah, I mean, I've limited it now. So I'm trading on Tradeovate, and you can set daily profit limits and loss limits. So because I'm trading 150K, my loss limit or max loss limit, worst case scenario is $2,000. So slightly over 1%, 1.5%, I think, roughly, give or take. So that's the most I would be allowed to lose in terms of until I'm locked out of the futures account for the day. Anyway, I don't think there's really much else. Dollar yen is getting a bullish reading as well. However, my time is up. So we will leave dollar yen. Might cover it tomorrow. Ladies and gentlemen, thank you for being here. Marco is coming to take over the show, so make sure you don't leave. Guys, have a fantastic rest of your days. I'll see you all very soon. Stay safe. Don't get margin called and enjoy the rest of your day.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, and welcome to my segment of the stream. I hope everyone is well. Hope you're having a good Wednesday. So, what is happening in the markets? Well, I usually like to start with our form. So, since we're doing a giveaway, if you want to participate in the DNA funded giveaway, I have posted the link to the form in the comment section. So fill it out. I'll grab all of your names, put them in the wheel of names, and in 15 minutes, we will get the winner. It is going to be a 10K one-phase account. So that's our first order of business. Second one is to look at the breaking news. So if we look at the market moving, breaking news, something I do on a daily basis just to see what is happening in the markets. So we have Stripe is considering an acquisition of all parts of PayPal. So turns out that's pretty good for PayPal, although I'm not watching individual stocks. I know there's a lot of stock people buying the dips at the moment. I think Nick is buying the dip as well on things like possibly Meta, possibly Microsoft, right? Maybe even Google, although Google didn't really have a big dip. It is still on a bit of a discount. And then the one that actually impacts me personally is, or my personal positions, Iran's deputy foreign minister, Iran is ready to take any necessary step to reach a deal with the US. So looks like Iran is looking at all of the ships that are moving around Iran. They know the sort of the seriousness of the situation, and they want to make a deal. This is risk on. This removes some uncertainty. So the impact is supposed to be a bit bearish on gold. Just a little bit bearish on gold. So that's why also yesterday we printed kind of a big red candle, right? So we were moving lower yesterday, but overall, today is actually positive. Today we're back in blue. I do have a buy position on gold on my prop firm accounts. This is more of an aggressive position, took it late on a Friday. So not something you really want to take, or I really wanted to take on the personal account. But for prop accounts, it's best to take as many positions as I can, as long as the position has an edge behind it. So I'm in gold. I'm also in the Nikkei. Nikkei is absolutely flying today and yesterday. So we have had some really, really good price action on the Nikkei. One major catalyst for that is Japan's Prime Minister Takaishi relayed to BOJ Governor Ueda reservations about a future rate hike. So now people are wondering, will the Bank of Japan actually hike interest rates? If we look at the forecasts, BOJ, we should end 2026 at 1.27. So current rate 0.75, we should end at 1.27. As you can see, the curve is to the upside. See, curve is going higher. But this begs the question, will they actually hike as much as we thought? Will they hike as much as is priced in? If they don't hike as much, the markets will interpret that dovish, and the stock market should benefit. So it already is benefiting. I mean, the stock market moved from this news, moved up 4.8%. Nikkei moved up 4.8%. That is absolutely massive. So massive movement on the Nikkei. My plan is to just keep on trailing the stop loss. This was a signal in the A1 Discord. So if you want to join the A1 Discord, get all of my signals, all of my knowledge, and also all of the posts that I do about general macro economic events, you can click the link in the description and you can use the code Marco to get 25% off. So I'll see you inside. Anyway, looking to trail the stop loss. Current stop loss is at 55821. I'm looking at the 20 MA. Once the 20 MA moves up a bit higher, I'll be able to move the stop loss a bit more. Or if I want to lock in some aggressive profits, maybe I'm going to trail it even above the 20 MA. I'm thinking about the situation. I like the breakout. I do want to secure some profit, to be honest. What the thing I wouldn't like to see is for the price to come all the way back down and take me out. That is something I would not love to see, but I'm still thinking the best approach to trail the stop loss. Back to gold. What's the game plan on here? You may ask. The game plan is basically trail the stop loss. So if the price wants to continue higher, I'll keep on moving the stop loss below the swing lows. Or maybe taking profits before we hit all-time highs, because we could definitely pause at those all-time highs. That's something to think about. Current stop loss is at break even, so this is now pretty much a risk-free position, and we'll see how it goes. If I look at the EdgeFinder and if I search up gold, gold is getting a neutral reading on the EdgeFinder. So if I was to take a buy position on my personal account or take another position, I would have to wait for a bullish reading. So I would have to wait for a bullish reading. Last week on Friday, we actually did get a bullish reading. If you go to the history, you can see Friday, February 22nd, it was bullish. Was Friday 22nd? No, sorry, Friday was the 20th. Yeah, so February 20th, score of 6, which is bullish. But now we have flipped to neutral, and actually a score of 0. If we look at this a bit more, let's check it out. Okay, usually it says the delta. So usually it says which score has lowered, which score went up, but I cannot see it at the moment. I think that the COTS probably moved and the retail sentiment probably moved as well. Let's see, crowd sentiment signal bearish. It used to be bullish. So the crowd sentiment moved from bullish to bearish on gold, and something else moved, but I cannot quite catch it at the moment. Anyway, back to financial juice. If we go to Forex, just a quick scroll for today. I'm looking at the red folder news. So I'm looking at the news that's highlighted in red. You have some Eurozone stuff, not that important. Some German stuff, that's also kind of the Eurozone. I mean, it's all in Europe. China aims to boost output of relatively advanced chips to 100,000 wafers. I'm not sure what this means. Anyway, yeah, that's about it. So quick scroll for financial juice. Usually the market moving news gets you covered. Usually the most important stuff gets put on here. And the most important stuff is this. Your question may be, if this was a post that's bearish for gold, why is gold continuing to go higher? In my opinion, the macro situation for gold is still bullish. There's still quite a lot of uncertainty. You have Greenland, Venezuela, Trump, US, Iran. It's still all in the air. So it's still all pretty uncertain. And then something that happened recently, you probably know about it, it's the Trump tariffs. So Trump tariffs were deemed illegal on Friday last week. From Friday to Monday, Trump found a loophole. He put the tariffs back for at least 6 months. So at least 6 months. But no one knows what's going to happen after that. And no one knows if Trump will be able to implement longer-term tariffs, or if the actual tariff refunds will be given out to companies. So what does that mean? In general, that means uncertainty. Of course, gold loves uncertainty. When people are uncertain, they tend to go into gold as a safe haven asset. They also tend to buy the yen, but looks like they're not buying it at the moment. The yen is actually getting sold quite aggressively. That's why I did get taken out of my euro yen position. So my euro yen position got or hit the stop loss. That happened yesterday, basically, because of the comment that I showed you from the Prime Minister Takaishi. That was bearish for the yen, but it was bullish for the stock market. Pretty interesting how it goes. Let's go a bit further. To go through the watch list, I showed you the Nikkei. I showed you the euro yen, which is now going to be removed. So let's just hide the position, lock it, and then I can remove it from the watch list. Gold, I told you about gold. Your next question may be silver. What about silver? Am I looking to buy silver? No, personally, I'm not. Silver, let's check it out. Neutral, reading on silver. Personally, the price action on gold looks a bit better, looks a bit cleaner. Main safe haven asset is gold, not silver. So if there's some drama, the money will first flow into gold. Yes, I know there's a 70% correlation, or is it the 0.7 coefficient of correlation? But gold should be the first mover. And if I just zoom out, if I just look at this price action on the daily chart, it looks a lot cleaner than silver. Silver really dropped hard. So silver really had a substantial drop and just recently went back above the 20 EMA. I'm also focusing on the Aussie dollar, although I'm not getting any entries. We are touching that 20 EMA, but I was more looking at the 695 level to get in, like this. Looks like the Aussie is just battling it out, pushing higher. By the way, I'll post the link to the form one more time. So if you want to participate in the DNA funded giveaway, there is a link to the form in the comment section. Fill it out, and your name will get entered into a wheel of names, and then we'll do the giveaway. So fill it out. You still have 2 more minutes. I want to buy the Aussie dollar. I want to sell the pound Aussie. Same story. No real reason to repeat myself. I'm just not getting big enough pullbacks on the Aussie dollar, and I'm not getting any rallies in the pound Aussie. This thing just keeps on melting. If I look at any significant areas of support for the pound Aussie, we do have some. We absolutely do. So we have the 1.89 and we have 1.86. Both levels pretty crucial. I would still take a position though. If we pull back to the 20 EMA, I would still be pretty happy to take a position because then you have some room. Imagine this, I get in with, of course, limited risk. I can have my first take profit at the support level. So it could still be done. Let's also check the EdgeFinder AUD/USD. Neutral. What about the pound Aussie? Neutral as well. That's interesting because we were getting a bearish reading on the pound Aussie. So let's go to the history. Let's see what happened here. So we had a bearish reading. Now we went to neutral. We did get some news for the Aussie. We got the CPI month on month, CPI year on year. So this should be bullish for the Aussie. And if we do a deeper dive into, let's say, the pound Aussie, you can click this. And then we have a full breakdown of what is happening. So yeah, the CPI year on year is bearish. And if you look at the heat map for Australia, you're going to notice CPI year on year came out today, came out higher than the forecast. That is, of course, bullish for the Aussie dollar, or for the Aussie. Yeah, Australian dollar, basically. PPI, we didn't get it. Unemployment rate, we also got recently, which unemployment rate went lower than the forecast, but same as the previous number. I mean, I'm just looking at the whole situation in Australia. I'm looking at all of the numbers. I'm looking at what the central bank is doing. It all seems pretty good. It all seems especially bullish for the Aussie Australian dollar. And you're getting rate hikes. So current rate 3.85%. By the end of 2026, we should be at 4.25%. That's what's priced in the markets at the moment. And that is what should lead this chart to continue pushing higher, right? So, time for the giveaway. Let me grab all of the names. So let's see. Today is the 25th. Yes, okay, we have quite a lot of names. Let's be really careful so that I don't miss anyone. Okay, copy, wheel, paste, in. Let's see. It is the 10K one-phase DNA account. Esther or Giovanni? So, Esther, congrats on being the winner. I have your email. So after my segment, you can expect an email from me. The email will contain the code for the free challenge. Congrats again, and let's continue with the stream. Yeah, so let's also do the DNA funded segment. If you want to get funded, if you didn't win the giveaway, if you want to expand your trading capital, definitely do check out DNA funded. Okay, this is my personal 25K two-phase account, and with the code A1Live, you get 25% off any challenge. So A1Live, 25% off. I highly recommend you check it out. Great prop firm, ran by professionals. There's a big broker behind it. And with the code, you get a really, really good price. Quick update on this account. So my current equity is 25.9K. I'm up 3.8%, something like that. So it's going well. It's going fine. Also, this challenge is purely traded by ChatGPT. You may say, trading with ChatGPT, it doesn't work. It's stupid. Why are you doing that? Well, first, I'm doing it for content because I make YouTube videos. So it makes for nice YouTube videos and it gets quite a lot of views. Second, you would be surprised, but from June 2025 up until now, ChatGPT is up around 37 or 38%, which is much better than the S&P 500. So there's something there. Trading with ChatGPT seems to be working so far. And ChatGPT already passed phase 1 of a 50K, phase 2 of a 50K, and then it blew the funded stage. So it got into some drawdown, never got a payout. It just blew the funded stage. Happens, part of the game. Yeah, that's about it. DNA funded. If you want to expand your capital, check it out. Don't forget A1Live, 25% off. That's it. Boom. US stock market. Up today, recovering a little bit. Nasdaq recovering as well. What is interesting to spot or note is there's a lot of technology stocks that are kind of in the top, or the biggest American stocks in the world, tech stocks, they seem to be beaten heavily. I showed you Meta, Microsoft, Google, Nvidia, Palantir. Most of these guys are beaten and they are not doing well in terms of the stock price. Nasdaq is doing okay. I mean, it's flat, but is it really dropping massively? No. from the all-time highs, we are down only 3.8%. That's nothing. That's really minimal. So it's an interesting phenomenon at the moment that the biggest technology companies in the world are doing pretty badly, while the Nasdaq seems to be holding on. S&P even better. So the S&P from the top is down only 1.39%. That's nothing. What is my personal game plan? I can't really play individual US stocks. First, my personal account is too small. I mean, I can go in with leverage, but I have to open a new account because I'm in Europe. I have to open an account. I mean, I have to put in money into interactive brokers. So I would have to split my IC markets and my interactive brokers, and I would not have a lot of funds at my disposal. What I can do is I can trade prop firms, but most prop firms, most CFD prop firms, they don't have a lot of US stocks. I can maybe try futures prop firms. So that is something for me to look into for the next dip. But as far as just trading goes at the moment, I would love to get a trade on the Nas. Trading the Nasdaq is pretty easy. I mean, I can do it on my IC markets. I can do it on my FTMO. I can do it on my DarwinX account. I can, of course, do it on DNA funded. So it's pretty easy to get a trade on the Nas. I'm looking for all-time highs. So I have an alert set on the all-time highs. I'm looking to break into all-time highs, and then for a potential position. If we just continue chopping around in the range, that's a bearish sign. That's not a sign that I want to be in. That's not a sign that I want to buy. US 30 pulling back as well. Russell being flat. The DAX is starting to wake up. I don't know if you have been following the situation with the DAX, but kind of the overall narrative is new money is flowing into the German stock market, into the Japanese stock market, into emerging markets. So Brazil, Peru, not so much into the US stock market. The US is kind of on the sidelines at the moment. That's one of the reasons why the Nikkei is flying so much. That should be the reason why the DAX is going up, but the DAX has been struggling. So we had a massive range. We did finally break out in January, pulling back aggressively. But if we can go into the all-time highs, if the 20 EMA catches up like this, so let's say this happens, and if the EdgeFinder prints bullish for the DAX, well, then it's game on. I'll be pretty happy to get in on a buy position on the DAX. I think the narrative that was prevalent in 2025 is going to continue into 2026. I think new money will not flow as much as it did into the US, but it will find other areas to flow into. One of them could also be gold, of course. So, I mean, gold has been a massive flyer for 2025. So a lot of capital flew into gold, but the DAX could catch some of that as well, right? So there is a bit of a, it's not really the debasement trade. It's not really a sell America trade, because is America getting aggressively sold? Look at the S&P. No, it's not. It's not a sell America narrative. It's more like diversify narrative. So the narrative could be called let's diversify. Okay, time for the comments. Let's see. Sir, I'm day trading in US stocks right now. I'm in good profit. Mostly are tech stocks. This is my new experience. Like this profit, shall I exit or wait? Okay, that's a silly comment. Adidas time. Yes, got the Adidas out. Hello, Sluggy. Welcome. Marco would look red if you put on shades on that drip. I need to get some shades. You are correct. Aussie CPI came in hot. Yes, that is pretty interesting. So Aussie CPI coming in hot, that's of course bullish. You know, hot inflation, bullish currency. Ball out, hello, welcome. Trading JPY longs is like watching grass grow a little bit. Yeah. Rate cut bet greed. Not sure which rate cut. Hello, Joshua, welcome. Looks like the most important macro fundamentals for DXY is Trump's mouth. I think the market will ignore the hot economy. As far as the DXY goes, I'm actually bullish. I think we found the short-term bottom. We found some support right there. By the way, this exact top was the moment that Trump came out and said he doesn't care if the dollar goes lower. So he doesn't care if the dollar weakens, which is the exact moment when the dollar bounced up higher. Funny how the markets work. I'm looking at this. I'm looking at the DXY. I'm reading stuff from the traders that I follow, and I don't see a catalyst for a bearish DXY. I just don't see it. All of the things are pointing to a bullish dollar except rate cuts. Yes, so we're going to get rate cuts. If you go to the rate probability, if you go to the Fed, the curve is down. Current rate is 3.63. Until 2026, it should be 3.1. Let's go to the Fed watch tool. So let's see. By 2026, yeah, still the same thing. 2 rate cuts of 25 basis points hasn't changed. So that's the only bearish narrative for the dollar. But I think that the dollar shorts are massively overcrowded. If you get an escalation between the US and Iran, it should be bullish for the dollar. If you get an escalation in the tariffs, that's a question. We could be bullish, we could be bearish. I think on Friday what happened, the dollar initially sold off, didn't it? Let's take a look. Yeah, dollar initially sold off, but then it recovered pretty quickly. That could be another bearish catalyst if we get some tariff drama. But all of the other stuff pointing to a bullish USD. GJ. GJ, yeah, sure, GBP, JPY. So GBP, JPY, for the pound, I'm pretty bearish on the pound. So I do believe for 2026, the weakest currency is going to be the British pound. As far as the yen goes, right now, it's uncharted territory. I mean, it's uncertain territory. I was pretty bullish on the yen, and then Mrs. Takaishi came out and said that she has reservations about a further rate hike, which kind of crushed my whole bullish yen story. So now personally, I'm looking at the numbers, looking at the fundamentals. I would be patient. What does the EdgeFinder say? Neutral score, so EdgeFinder is agreeing with me or I'm agreeing with the EdgeFinder. If we run the UK heat map, 50-50. If we run the yen heat map, only 33% bullish. Okay, fine. Personally, I don't have an edge here. I had my attempt. I sold the euro yen. Didn't work out. You know, part of the game. But I'll be patient for now. Sluggy is expecting a 15% drop peak to trough. Okay, interesting. That's for the NAS. Personally, I don't think that's going to happen. I'm not seeing a 15% correction. I'm actually seeing a possible recovery. I think the massive technology companies are starting to recover. I'm talking about Microsoft, Meta, Google, Palantir, the ones that I showed you basically. They have started to recover. I think that recovery could last. I think the sell software narrative is done. So the path of least resistance, in my opinion, is to the upside for the Nasdaq as well. If we go into all-time highs, it will confirm my story, but right now I'm being patient. AACA, thank you for the comment. Nas pushing nice. I virtually got scared of Trump and DNA breach on news. Okay. What news? Like the scheduled news or the breaking news? I guess the scheduled news. Anyway, my segment is done. Thank you very much for watching. Don't go anywhere because Tiger is coming on right after me. Good luck in the markets. You can catch me for the whole week. I'll be streaming the whole week, and I have one challenge to give away per stream. So good luck. Have a great Wednesday, and I will see you tomorrow. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy hump day. Happy Wednesday. I'm on here to close out the show for the day. Well, what did you guys think about this of the State of the Union last night? I know he did break a record for longest speech. I do believe it was like 1 hour, 45 minutes or something like that. But as far as notes I kind of looked at, as far as things that I thought was kind of interesting, outside of the kind of the first hour was more of a rundown of all the things that have taken place so far in that first year. Obviously, he did a lot of talking about tariffs, just looking at my notes over here. Obviously, the Dow, the S&P hitting the records that we've had. But one thing, well, a few things I thought that was interesting was probably the most exciting thing was where he talked about the potential ban on all the congressmen for trading stocks, guys. Isn't it? Is it funny? Is it ironic that that's the one thing that everybody kind of stood up for? You had moans on both sides of the aisle. You had groans on the both sides of the aisle. So anyway, I just thought that was interesting because it's, we all know about Pelosi and some of these other people, but it's on both sides. Where they're kind of taking advantage of their positions. So yeah, I think that's kind of interesting to, bring that up and potentially get that bill signed so that they can pay attention to us instead of their trading accounts, right? Get retired first, for crying out loud. So anyway, there was that. Obviously talking about the cost, inflation. One thing that I thought was kind of interesting was where he talked about a new matching contribution up to $1,000 a year for individuals that maybe don't have the 401k accounts, as far as getting their own accounts set up, guys. We hear all the time, and they preach all the time and, pat themselves on the back all the time about the 401ks growing, which is good, but not everybody takes advantage of that, right? So that was something that it sounds like they're at least trying to explore to get set up to where even people without 401ks can have a way to invest into the market. So we'll see how that all turns out. I just thought that was of note. Obviously, if that's the case, they would do the matching, and then the more money in the markets, the better, right? more sustained long-term growth. So we'll see how that all shapes out. I just thought that was interesting. And then, yeah, it was just interesting to see again how he kind of went to a different section of the what was it, the Trade Act of 1974, I think it was, as far as the new section to keep the tariffs on. And guys, so it's at 15%. And just remember, that's nowhere close to what President McKinley had back in the 1890s. I mean, we're talking, back then he had it up to, he first of all had sponsored an act, just a little bit of history for you guys, that he had sponsored an act as a congressman where they introduced some tariffs that I think changed it from 35% to 50% at the time. This is, again, the 1890s, so 120, 130 years ago. But then obviously when he went into presidency, 1897, I think it was, is when he signed in the new tariff act to where the worldwide tariffs were anywhere from 47 to 53% or something like that. So pretty high, but as much as everybody kind of complains here and there about the tariffs now, at least it's not 50% like it was back then. So interesting stuff. But one thing that got kind of lost in the shuffle of last night was the Australian CPI report that we kind of talked about yesterday. So once again, guys, just like I showed on that month-to-month history yesterday, I think it was, or the day before. Once again, they missed expectations, but this time they missed to the upside. So that's now 5 straight releases for the Australian inflation numbers that exceeded expectations. So 3.7, okay, was what they projected. I mean, it remained the same, 3.8, but because it missed the economist expectation, we did get a little bit of a boost. And so when we look at the AXI, which is the Australian currency index, it's currently getting a little bit of a boost. I mean, let's just take a look at that real quick. As of the open, okay? So there you go. A little bit of a gap up on the AXI. It did kind of bounce. Well, it's still kind of trying to chew through that overhead supply I had drawn up from way back over here. Okay, talking about the February of 2023. So it's obviously 3 years old at this point, and we've been having some trouble with it. I mean, Australia, if you remember, it kind of had a very, a decently strong economic impact currency score. Okay, talking about the index score. We had a strong score. And so, even though it was strong, it kind of bounced into that resistance, if you will. Just kind of been bouncing back and forth. Well, obviously now we've kind of, Australia has come back closer to the neutral territory. Here, let me refresh that. Sometimes these don't populate all the way. But one thing I was just kind of observing on the currency front is how all the currencies are kind of coiling in together. If we take a look at this awesome new piece that Nick added, talking about the chart, if you will, of the recent scores of recent days. But something I was just kind of looking at today was the fact that if you look over here to the right, look at it. It's everything's just kind of coiling together. It's just kind of, it's going neutral. I mean, we had the yen all the way at the bottom, very weak at one point. We had the Kiwi up there, the euro, and then again, the Australian dollar that were pretty strong at one point, and everything's just kind of reverting to the middle. There's your Australia, the purple line there, coming back to the middle. So pretty tightly coiled. So it's no wonder, it's no real surprise to me that we have a lot of just neutral stuff over here, guys. Taking a look at the top setups. So we just got to make do with what we got, but we do have a strong score on oil still. The dollar itself, dollar yen. And then as far as the bearish side, we've got the euro dollar, euro Swiss, euro Aussie. So that's some of the main pairs I personally am keeping an eye on. We do have the Dow up there. We also just had oil inventories come out. Okay, for anybody that trades oil, we had a negative number the previous period, negative 9 million barrels. They projected that to go to 1.8, but we blew it away, guys. Went to 16 million in stock. So obviously, the more oil we have, the more supply we have, the cheaper prices can get. So prices going down. What happened with oil? Now, oil, and this is one thing I like to do. This is how I like to use the kind of a combination of the economic calendar and then the top setups. Is since we know we've got a really strong score on oil, okay, when we're looking at all the fundamentals, sentiment, technicals, all that, but yet we come out with a negative report like we did here where we've got an oversupply of oil, well, that should obviously give us a little bit of a spike down, right? Well, the goal is to have it spike down into a demand zone to buy and take it the other way. Right? That's really that's kind of the goal. That's the plan. So taking a look at oil, let's go find it real quick as far as the chart goes. And you guys, if you have any specific assets you'd like me to check out, let me know for sure. I can always bump something to the front of the line if need be, but we'll take a look at oil here and kind of see where our demand zones are at. Okay, so daily up, 8 is above the 21 as far as the exponential moving averages. That's in line with the higher highs, higher lows. That's good. Pretty strong because we did blow through the supply zone. So on a higher time frame, I like it. We're blowing upwards. It's looking good. If we kind of zoom in a little bit, now we did bounce into that 4-hour demand zone just a while back. But if I refine it a little further into a 1 hour, we actually dropped into a 1 hour demand zone. So that's a 1 hour, 4 hour confluence. Okay. That's what I like to see. You guys hear me blabber all the time. I prefer daily 4 hour, but okay, if I want to dip down into a little bit more noise and just be careful with the risk, well, 4 hour, 1 hour is a pretty legit spot too. So I did actually get into a trade on that on one of my accounts just a little while ago after we dropped into the demand zone after the oil number came out. So there you go. Okay. Negative bearish candle, kind of an expanded range candle to the downside when you compare it to the recent candles. And that's where that number came out. So bearish number. Okay. Bearish number, but overall we have a strong reading on the EdgeFinder. So, the goal is don't let one bad reading or one negative reading completely sway your direction for the day. Okay. Because again, everything's screaming buy. Very bullish score. Okay. This is what a lot of people do though. They see that, oh my, we got a huge supply. That's way too much. It's going on sale. We got to be selling the hell out of this. Right. And that's exactly what you got. Okay. On a 1 minute candle. So the way I look at this is, even though it's bearish, I like that because it dropped it right into a zone of demand with some fair value gaps, showing strength, showing demand heavily exceeded supply. And oh, by the way, we bounced right into a 200 EMA. So me gusta. I like it. Okay. 50 is above 200, just kind of confirming some strength as far as the trend goes on the smaller time frame, the 1 hour. So yeah, I took a small stab at this. Now, I didn't put a very big risk on this because if I look at the curve analysis, well, where am I at? Where's my swing low? Where's my swing high? We're high on the curve, are we not? Almost in the middle, pretty much in the middle. So am I diddling in the middle? Yes, I am. Actually, I'm diddling closer to the top. But the point is, I just tiptoe in. Okay. Whatever you guys' idea personally is of a normal risk that you put on a trade, whether that's 0.5%, 0.75%, 1%, whatever the case is, or 2% if you're really crazy. I say that lovingly. But whatever it is, then this is where you would probably look to drop down the percentage. So, for me, I'm a very conservative trader. When I get into something that I think is a grade A setup, I just stick with 0.5%. Hey, that's just my risk tolerance. It's different for you. It's different for Nick. It's different for everybody. Okay, we all have our own risk tolerance. So yeah, just keep that in mind. But for me, when I have if 0.5% is my main risk as far as a grade A setup, well, if I want to tiptoe in, I'm going down to a 0.2%. Okay, doesn't sound sexy, but again, you can have several losses in a row at a 0.2%, and you're not going to be blowing accounts or breaching accounts or breaching your challenge accounts if you're in a challenge account, right? Which, by the way, there is a code A1T35 for Ola Prime, courtesy of Nick, the relationship he's built with them. So if you guys are looking for a new account, you can always go there. And yeah, there's quite a few, and it really, no matter how you trade, there is a package for you. Short-term swing, scalping, crypto, currencies, okay, everything, you name it. Futures, there's futures in there as well. So yeah, definitely give them a look, olaprime.com, if you guys are looking for another prop account, okay, prop broker. So, but anyway, yeah, that's oil. Just a small trade on it. I'm just going to let it do its thing. There's nothing I can do. Okay. step away and ignore it. And obviously, as far as take profit goes, kind of keeping an eye on this 15-minute supply, actually, no, 30-minute supply right here. Okay. So I'm keeping an eye on here, and I actually did refine it down to 15 now that I remember. So I'm actually looking at this indecision candle right here. Because right after that indecision candle, as far as this leg out, that's where the VSA candle started growing. That's where it turned yellow. That's where it started to gain more traction to the downside. So for me personally, yeah, that's where I'm out of this trade. Okay. Because if you kind of take a little bit more of a step back on this 1 hour chart, what are we getting? Lower high, lower high, lower high. Okay. Lower low, lower low, lower low. So it's a little bit, it's not exactly the strongest, that I would like to see it. And it makes total sense because, again, we're at the top of the curve. If I'm looking at swing low, swing high, right? So I'm not trying to be greedy on this. I just want to give whatever the market might generously give me. Okay. And I'm just going to go to that simple 15-minute supply, sell out just ahead. Okay. Again, I think I might have said this yesterday. A lot of people will take profits at the swings themselves, the swing high, the swing low. But just keep in mind that sometimes you can get these zones with unfilled order potential when it has a strong gap like this does. Okay. Then it doesn't have, it may not get to the top. It may not get to the swing high. So just keep this in mind as far as a zone, right? And that way you don't have to be exact either. Another thing I like about supply and demand zones is, hold on one second, guys. Another thing I like is that you don't have to be exact. Okay. You don't have to be exact. It's a zone. It's a zone for a reason. Okay? You might catch a bid on the top of the zone, might be the middle of the zone, it might be the bottom of the zone. So, it's just a little less stress, I think, versus support resistance lines, things of that nature. So that's just the way I see it. Again, we all have our own risk tolerance. So gold. Yeah. Have you done gold? Let's take a look at gold. So gold obviously is still giving us that neutral score. Might still be a +4 if I remember right. Let's go look. Good. Actually, no, we're a little deeper. Oh, we're at 0. Straight up 0, ladies and gents. So +4 on the technicals, -2 on the relationship of smart money and dumb money, and then -2 on the fundies. Okay? A little too mixed of a signal, but let's go look at the technicals for you and see what we've got. Daily chart, as always, start from there. And it's kind of, you can kind of start to see we've got some higher highs and higher lows going if we're just isolating to this, this price action after that big drop that we had right after, among other things. We're not going to bomb Greenland or any of that nonsense. Okay, remember that stuff came out here. President Trump was talking to NATO Mark Rutte, I believe it was, confirmed that, and it seemed like the day after, price just kind of dropped. Okay, that's a little less chaos in the world, right? Hey, we're not going to bomb them. But then obviously now we're focused on Iran. So yeah, if I go to a 4 hour, let me see where I'm at. Yeah, so we did end up taking up this liquidity. We went a little higher. We did get a drop. And then I currently have a demand zone down here. Let me see. Did anything new form over the night? So this is an Asia session with the red background. Yeah, I don't think I really care for any of that. The speech started right here on the 2000 hour for me. That's 8 o'clock. So gold, yeah, just straight sideways. I mean, if you go to a smaller time frame, a little bit of a boost initially, then we retraced and went below, and now we're just basically about the same place we started. Okay? Talking about just since the speech. Same thing with silver. Let's see. Silver actually got a little more of a boost upwards. Okay, here's our candle where the State of the Union started. So it just got a sudden push up and it just died off. Just went sideways. London session got bored with it. Okay. But anyway, going back to gold. What have I got here? Let's go to some smaller time frames. Okay, so I did have a 15-minute demand zone drawn up over here. Or no, I guess it was 5. Go to a 5-minute. Is it 5-minute? Yeah. So this was one that I was keeping an eye on. And as you can see, we bounced into the zone, collected unfilled orders, and had to push up. Now, I wasn't interested because it's neutral. I think yesterday gold was still giving us a +4, if I remember right. So neutral, but at least it was pretty close. But then what happened? Everything reverted back to the middle again. Okay, zero. Straight zero for gold. But there you go. Just goes to show the power of supply and demand, guys. Now, the only one I've got left is this 5 minute down here. But again, the smaller time frames we get into, the more noisy it gets. So just always keep that in mind, guys. Okay? There's a reason Nick and everybody else is doing all of their analysis, including myself, typically on a daily time frame. Okay? The higher time frames. That's where the banks are trading. And they got their algorithms. They've got their bots that handle the smaller time frames. But they're prop traders. Okay? They're big wigs. They're typically on the higher time frames. So just keep that in mind. But yeah, I'm kind of keeping an eye on that. Let's see. Do I have anything closer though? A lot of activity took place here when the market opened, obviously. But yeah, we were just, I mean, if you really wanted to get aggressive, you could take a look at this on a 3 minute demand zone time frame, but I wouldn't recommend it. Yeah, I don't think we got anything, to be honest with you, because if I go to some of the higher, more consistent time frames, we're a ways away. I mean, you guys, I remember last week I was talking about this 4 hour zone all the way at the bottom. But looking at anything kind of close, we don't really have it. Now, if you wanted to just take a, if you look at the former resistance and wanted to take a support bounce, okay, resistance becoming support, then that right there was your candle yesterday morning, about the same time actually. But it's just kind of went up, went sideways. So what I would do if I really wanted to get into this trade, yeah, like I say, I'm probably gonna ignore this alert at this point, because I created this alert, okay, in this area when price was still down here yesterday. But now we've done runoff, created some new highs and higher highs and higher lows. And a small 5 minute zone on a price on an asset that's moved that far away is probably not going to hold. Probably, I'm not interested in it personally on the demand zone front. But again, if you're just looking at support or resistance, in this case, becoming support, then yeah, we're basically pretty close there. Maybe just a simple retracement back, bounce off of let's go to the 1 hour actually. Okay. 1 hour. We got the 200 EMA that is kind of floating its way up there towards that area. So that could be a potential play as well. But yeah, break some highs, create some new, higher quality 4 hour demand zones, 1 hour demand zones before I personally am really interested in getting into it. And that's not until we get a bullish signal, right? What we got over here? Intraday as well. Yeah. I'm playing around with some 15 minute time frame stuff. That's where I'm primarily utilizing the, daily time frame. I want the 8 to be above the 21 EMA if I'm trying to buy something. And then on the 4 hour, the 1 hour, the 15 minute, I should say, I want to make sure my 50 EMA is above my 200 EMA, and then just get simple retracements back to the 200. As long as that 200 is in or around a supply or demand zone, that's good. If I get that overbought, oversold reading on RSI, that's another odds enhancer. As long as the 50 is above the 200, and then we bounce into the zone, and then we get a simple momentum candle to the opposite side, whether that's a bullish engulfing candle with a wick underneath it, inside bar followed by a break of that, or just a simple 1 hour, bullish close or opposite direction close. And then we enter on the breakout of that candle. That's kind of how I'm looking at it. Weekly. Yeah. Look, the higher the time frame you go, the stronger the zones get. The higher you go. Let's take a look at something. I'm going to show you guys something. If you guys want to practice with supply and demand zones, there's an actual order block tool that you can do it with. Let me just turn everything else off. See that? So this is MTF multi-time frame S&D, so supply and demand order block. This is an indicator you guys can find for free on TradingView. Okay, just go type in, what did I type in for it? Yeah, it's right here. Supply and demand / order blocks. JP7FX. That's the developer for it. You guys anybody can find that for free. Now, this is something I used to use a lot, but I've been staring at zones for years now, so I don't use it anymore. But it is nice to have sometimes, just to take all your drawings off, all your moving averages off, everything else, and just look at a strictly naked chart and just take a step back and take a look and see where zones worked, where zones didn't work. Okay, this is an example here of a zone it drew up. What happened? Price bounced into the zone. This is a monthly chart, guys. Okay, the higher, the better. The higher, the more accurate. Now, we want something. Now, if we're not interested in long-term, multi-year trades, then we don't necessarily want to stick on a monthly chart. Right? But yeah, weekly chart, just to answer your question, weekly, daily, man, that's some of the best ones. I mostly look at daily, but I do like to go up to a weekly chart as well. Okay, again, there's a weekly zone. You see how it discolored itself? So whenever a zone gets hit, before it gets hit, it leaves your lines out there like this. But after it gets hit, it just closes the lines out, just gives you a discolored candle. So there's a perfect example of a weekly demand zone getting wicked into and bouncing the opposite way. Okay? You can just kind of play around with this. Okay, you'll see that some zones work and some don't. And there's a reason to that. Okay, maybe they're in the retail chop zone. Maybe they're diddling in the middle, where those zones are in the middle of the curve. In other words, the relationship between swing high and swing low, right? But yeah, I would just encourage you to go play around with that. Again, it's something I used to use a lot, but as training wheels, think of it as training wheels. You'll get to a point where you don't want to see a whole bunch of crap on your chart. You guys have all seen the charts where they have 1,001 indicators on here. And it just creates mass hysteria, paralysis analysis, right? But yeah, you'll come to a point in time where that just kind of gets old, turns into old news. So, but anyway, yeah, play around with that. And there's settings on here to where you can say, show me the last, 2 zones or the last 5 zones or whatever the case is. You just go over here to inputs, type in if you want to add 5 on either side, then it'll start showing you some higher time or some farther away supply and demand zones that have not gotten hit. I just personally leave it on 2 because otherwise it starts doing this. It crunches up your chart like you do there. So yeah, I just leave it on 2. Just show me the last 2, not 52, Tiger. 2. That way it's cleaner, because at the end of the day, all we really care about is the most recent supply and demand zone. Right. So anyway, play around with that. I'll turn that off for the rest of this and get my goodies back on. What else we got over here? Yeah, so as far as today goes, guys, I know we're already up against time. I am just going to maintain my oil trade, see how that kind of works its way out throughout the course of the day. And I've got a whole bunch of alerts over here. Some of these are still neutral alerts. But as always, guys, if I set up an alert and it goes to neutral, I'm not going to delete the alert, because we all know how dynamic the top setups can be, right? So perhaps it goes from bearish or bullish to neutral and then back to bearish or bullish. Well, I don't want to forget about those spots. So the only other thing I'm watching outside of oil is the fact that we did bounce into this supply zone on the Nasdaq for a possible short. Now, it is also neutral. Okay. So I would really like to see some action. If I want to short this, I'd like to see some negative numbers on the top setups, but I don't think we may not even get it, because if we're looking at the rest of the week as far as high impact events, tomorrow we do have our weekly unemployment claims, and that's already projected to be an increase of 11,000 on the claim. So that would obviously, obviously if we match that, then that's priced in. But if it's anything higher than that, that's not good for the dollar. Perhaps I could take advantage of that on the short side of NASDAQ. But yeah, probably not, because it's still quite neutral. If I just finish up by looking over here, in fact, it's +3. So yeah, we're going to ignore that. But man, if from a technical aspect, guys, I got to say, that's a hell of a spot. That is a sexy supply zone to me. But I can't sell something if it's giving me a neutral score, much less a +3. Okay, +3. So yeah, as much as I like it, going to ignore it. Focus on my oil trade and then play around on the 15-minute time frame today. see if I can't find some trades. 15-1. It's kind of where I'm planning for the day. So, but that's about it, guys. My times fly by. We'll be back on tomorrow, same time, same place. You can find me at Trade Like a Tiger as well on YouTube. So peace out. We'll see you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.